Hello everyone. Today we're going to quickly go over all of the different niches and where the new AIG simplified issue product is going to fit in your portfolio as it currently stands. So this is a product that you might not have access to yet. It is being rolled out on a limited basis. Some of you may have gotten an email, others of you may not have. It depends on hierarchy and some other factors, but if you don't already have it, you will be getting a hold of it soon. If you have an AIG contract, of course. And if you don't, and your IMO offers it, it might be worth picking one up for some of the reasons that we'll discuss in this video. So before we go into the details of the product, we're just going to take a look at how it basically fits in with other players in the market in the final expense space. So we're just going to put in 15,000, and we'll start kind of an average client here. So 65 years old, non-smoker. We'll leave it as Ohio. Pretty much every carrier is there, and we'll put male. So when we run this here, we see that, the usual suspects. I have every carrier in the system turned on, so everything's going to show. The kind of the cheaper carriers up here. We get into the more competitive premier carriers, Transamerica, Trinity, Liberty Bankers. And we scroll down just a little bit, and we see AIG. So it depends on, interestingly, this is one of the products that it really depends on the age and the face amount you're putting in. It can vary pretty heavily, but typically you're going to see it slotting in right around American Amicable. In this case, it's only a few dollars more. The Royal Neighbors range. On some bands, it's actually quite a bit cheaper than Assurant, but this is a pretty good representation of where it usually ends up being, right around this range here. So it's definitely not cheap, I would say, as it pertains to all the products on the market, but it is definitely competitive. It's not a discount carrier, but in the same way, it's not, you're not slotting up here with the, the Lincoln level. So with that said, we're going to run now with tobacco quotes. So we're going to change this to cigarettes and see how that changes. So when you look at the cigarette right here, you have to see we have to scroll down quite a bit to come back down to AIG here. So see the carriers above it, we have more or less almost everyone here that I have turned on in the system. When we run a tobacco quote, and that's a theme that we're going to see come up in this video a number of times, is they just really don't like smokers in a number of different ways that manifests. But there's actually a few bands where they're cheaper, or they're more expensive than Lincoln Heritage. With, granted, Lincoln Heritage, one of their niches is they're a little bit more friendly to smokers, but it's pretty interesting actually that the policy can end up being more expensive than Lincoln at certain bands. So what we'll do now is we're actually going to run a comparison to show you what how much they really don't like smokers. And if you want to play around with the rates, the product is in the toolkit, so I'm not going to go too much into that now. That's something you can make a determination for yourself with your carriers. But we're going to run here, and just to show you visually, when you look at the graded product, it's a unit tobacco rate, so they don't care if you smoke, and it's just male or female. With the regular product, it's male, female, smoker, non-smoker. So the tobacco table is a little bit different because you can see it stops at 30,000 and it stops at age 70. With the level product, you're 50 to 80 and you can go up to 35,000. Interestingly, when you have to be above age 70 to get a higher face amount. So this is one of the only products, I think it's the only product I've seen, final expense product I've seen in our system where when you get older, they'll issue a $35,000 policy to an 80-year-old. But if you're 50, they're not. And this is something that you usually kind of see at the very younger end. So if someone's in their teens or 20s, you'll see some of these companies that offer coverage offer a lower amount, but it's pretty abnormal that a 50 to 80 kind of a normal final expense range when everyone's kind of seen as like a mature adult, that you see this kind of limiting at the lower, I guess, can you even call it the lower end? Someone who's 70 years old. So that's another interesting niche of the product. And like I mentioned with the smoker, you get capped at 70 and you get capped at 30, so you can't even get 35,000 at any band here. So we're going to take basically the most expensive possible comparable rate here. So you can see for a smoker, the most expensive you can get is a 30,000 70-year-old male. So we're going to run that, but actually we're not, because you can only go to 25,000 on graded. So we're going to take a 70-year-old 25,000 male graded, and compare that to the smoker rate. So we're going to put 25. You can see a smoker, we're going to leave it at age 70, and we're going to run this one level. And where is it? Here it is. So 289.63. So now we're going to head over here and we're going to put in 25. Put in graded, 70. This doesn't matter because it's a uni-smoker rate, but we'll just change it to none for now. And you can see we have 230.82. So the annual rate, just to give you a better idea, so it's about $2,600, $3,254. So it's a pretty substantial difference when you look at how much cheaper really the, because remember in this tab here, I'm running the level rate. The graded rate is actually quite a bit cheaper than the level rate is if someone smokes. So that's just something to keep in mind, just how they design the policy. And I'm going to go over some of the niches now to keep in mind. The first basic one I went over is that this is pretty much a modified policy, so it's the same as their guaranteed issue when you're looking at the graded. So it's ROP plus 10% in the first 2 years. So it's not a true graded policy. Again, the graded is cheaper than the smoker at pretty much all bands and ages, so that's something to consider when you're out writing business. Again, we covered the higher faces as someone gets older. This is a very unique thing in the final expense space, so just keep in mind that for whatever reason, even if they smoke, they just aren't going to issue these higher face amounts to someone who's quote-unquote younger as far as their age table goes. They're only going to issue those higher faces to the older people. Beyond that, you have the $30,000 max for a smoker for the level plan, and for the level plan non-smoker, you can go as high as $35,000. With the graded, you have the regular 50 to 80, and you then are capped at $25,000 at all ages. So this is a little bit easier to understand here. There's also, now we're going to get into the underwriting a little bit more here. So with the drug abuse, so one of their niches is they actually separate drug abuse for narcotics and for alcohol. So if you have someone who, you can see we added a drill down question here, is the abuse related to narcotics without a prescription? This is what they care about. This would decline it. If you answer this no, it's graded. Within, I don't have it off the top of my head, but I believe it's 2 years, or 2 or 4 years. I just don't know off the top of my head. But this is this is the only company we have on our effects side of the system that actually specifies the type of drug abuse, which is interesting. Especially, I don't think I'd mentioned, this is a true instant decision product, meaning it's 100% instant decision. There's no notes to underwriting. There's nothing. What you see is what you get on the computer. So this is very similar to Americo Eagle. I believe Oxford InstaWrite as well. So the decision you see is the decision you get. So I think we're going to get a lot of, sometimes just as is the nature of this automated underwriting, sometimes you're going to get things that shouldn't go through that do. Sometimes things that should go through don't go through. So that's just, we're going to have to keep an eye on that and see how things develop, especially because they didn't publish a drug guide with this product. So there's going to be some guesswork that agents have to make going forward, and it's just kind of the nature of this new product. But going into their cancer rules, so we actually had to rework our cancer menu simply because they ask about a lot of different types. So basically any of the types that you see here besides stage A prostate, they're going to decline for within 2 years. Any other cancer within 4 years is going to be graded. So they have a pretty generous, if you can say that, look back on the cancer. This isn't a 2 or 3 year product. They have a 4-year graded look back for most types of cancer. All of these are going to be a decline within 2. They also care about metastatic and then recurrent of the same type. So they're a little bit tougher on cancer than, I would say, most final expense carriers. They also don't have any question about hepatitis C. They specifically ask about hepatitis B, but not C, and they don't ask about liver failure. So they do ask about cirrhosis, but that's it. And when you look at the app and underwriting guide, the app is actually not congruent with the underwriting guide. There's cases where they completely diverge. There's things on the app that aren't asked at all that are mentioned on the underwriting guide, pretty important things. So don't take what you see at first glance, because it's a little bit inconsistent with how they published their materials to this point. But as far as we can tell, this appears to be a somewhat liver-friendly product with no hepatitis C or liver failure question. So they do cap, we already mentioned this, but they cap smokers at age 70, and that doesn't really end with their smoker kind of harshness. So the premiums are also pretty high for smokers, and in addition to that, they decline COPD smokers. So that's going to be something that I think trips up a lot of agents who don't use the toolkit or look out for it. That's not something they're going to take is COPD smokers. So beyond that, I think the most interesting niche to this product is that if you have a client with atrial fibrillation, they have to be on a blood thinner to get the level plan. So the way that it works for them, if they were diagnosed, if AFib was diagnosed within the past 2 years, it's graded no matter what. But if it's beyond 2 years diagnosed, you have to have the client on a blood thinner or they're not going to take it level. So this is pretty interesting. It does make sense medically, but it's kind of unique, as most carriers, if they're on the blood thinner, that's what's going to rate them. It's not, or the first fill of the blood thinner. It's not, are they on a blood thinner, at all, and that's the criteria for level. So keep that in mind. For clients with AFib, they are actually looking for blood thinners to give a level decision. So again, no drug guide at this time, so we're going to have to kind of play it by ear, work some data points to see what this true instant decision product really ends up taking. A few more things here. So they don't ask about muscular dystrophy, which is interesting. Not many carriers are like that nowadays. They don't ask about several major medical conditions like they don't. They don't ask about diabetic complications. So diabetic neuropathy, retinopathy, they don't ask. Nephropathy does slot in under their kidney question, but they don't ask about neuropathy or retinopathy. Insulin shock, they don't ask about diabetic coma. All insulin use is graded, and they are one of the only carriers, the only carrier, in fact, in our system on the final expense side that actually asks about A1C. So if you look at, we added this question in here. If I click through it, it should... Yeah, so the A1C reading we have in here. So essentially, if it's higher, I don't know it off the top of my head, but yeah, 10%. If it's greater than 10%, it's a flat-out decline. Between here, you're going to see graded, and then if it's 8.6 or less, it's going to be level. Now, again, if there's any insulin use, it's going to be graded, but this is something to keep in mind. They do care about the A1C. So also a history of diabetes, and if they've ever had a stroke or a heart, any kind of heart disease, that's going to be a decline. So they're kind of similar to a med sup in that way. They will not take heart failure, so CHF is a flat decline. So Entresto, those kind of medications you're not going to get through. They have a 6-month decline for a TIA, which is pretty interesting, and then they will decline if the client has ever had more than one. So they're a little bit on the stricter side with TIAs, I'd say. However, they do, for their wheelchair use, they only ask about chronic illness or disease. So that's pretty interesting to me, as if you had someone who maybe recently had a surgery and they're temporarily confined to a wheelchair, that actually wouldn't be a knockout for this product. They do ask, however, decline for other insurance within 1 year, so that's something that isn't too, I would say, too prevalent with other products, but they do say they decline for that. And then beyond that, just remember, this is the same thing as AIG guaranteed issue. So if you have to run the quotes by the 1,000. So if you run by you can see I put in an increment of 500 here. We're going to show you that red dot and recalculate the rate by 1,000. So you can only quote by the 1,000 with this product. Same thing as the guaranteed issue. And beyond that, if this is just kind of an observation I made, but the max payment age I actually saw as low as 90 on the tobacco side. So you can, at some ages, this product almost becomes a 20 pay with the max payment age. So that's something to look out for when you're running premiums. So overall, I would say this is definitely an interesting product. It remains to be seen how it's going to actually play out with approvals and whatnot, but it is competitive, I would say, on the rate side. A little bit pricey for smokers. They really don't seem to want that business as much as the other level and graded business, but it is definitely a product that has several niches that we're going to have to see how it all plays out. So please let us know if you have access to this product. If you can start writing it, let us know what you think of it. Are they issuing the business they should be issuing? Do you think that any modification should be made to the product? So feel free to leave a comment, let us know, and thank you for watching.